Now we'll start accounting for non-profit organizations. Actually, the organizations can be categorized into two parts: profit earning and non-profit earning. Profit earning organizations are those organizations which are engaged in economic activities, and non-profit organizations are those organizations which are engaged in non-economic activities. Till now, you were learning the accounting for profit organization, means their main motive was to earn profits. But there are so many organizations whose purpose is not to make profit, but that may be for social welfare, creating awareness, sports, music, art, etc. For example, you make a cricket club and your friends, schoolmates, or the friends of your society or colony all become the members of that club. They start contributing money in the club, and then you spend money on buying bats, balls, etc. So this club will be called NPO, non-profit organization. Now we'll learn how to do accounting for all these organizations. Number one, these organizations are not supposed to do the accounting according to the whole accounting cycle. I mean to say, generally what we do, first of all, we do recording in the subsidiary books. I mean to say, purchases, sales, purchase return, sales return, PR, BP, etc., and cash book. But in these organizations, all these subsidiary books are not prepared, because goods are not purchased, goods are not sold, because they don't buy anything to sell on profit. Goods are the items which are bought to be sold on profit, but they are not supposed to buy anything. So they prepare only cash book, which is called receipts and payments count in NPO. NPO means non-profit organizations. And number two, they also want to know whether their expenditure is excess of income or income is excess of expenditure. And that profit and loss is called income and expenditure account. So we have to prepare income statement, income and expenditure account, which was formerly called profit and loss account in profit earning organizations, and we'll call receipts and payments account instead of cash book. The treatment is almost the same. Before I start the practical, I would like to remind you some technical terms you have already learnt in your previous class. In this question, you may find some receipts in the receipts and payment account. You know, now in non-profit organizations, cash book will be called receipts and payments account. On receipt side, you may find so many receipts, and these all receipts can be categorized into two parts: revenue receipts and capital receipts. You know, revenue receipts means the items which will be taken to income and expenditure account, and the receipts which are treated as income. And capital receipts means which are not concerned with the income, like sale of furniture or sale of any other fixed assets, etc. In the same way, every organization has to spend money. I mean to say, they have to incur expenses. All these expenses can be of two types: capital expenses and revenue expenses. Capital expenses are those expenses which are incurred for the benefits of long term. You know, in accountancy, long term means more than 1 year. For example, you buy the furniture for ₹10,000. This furniture will be used at least 3 or 4 years. This is a capital expenditure. And other expenditure are revenue expenditure. Means, number one, if you try to define the revenue expenditure, which are incurred to operate the business or to operate the organizations, or the benefit you will take only for short term. In accountancy, short term means less than 1 year. For example, you pay the salary to the staff. This is revenue expenditure. This is operating expenditure, as well as when you spend money, you cannot take advantage or benefit from that spending for more than 1 year.